Hi there, Chris Oddy of Marslands Accountants here. And in this video, I'm going to go through the top 3 mistakes that we've had with clients doing their own property accounts for their residential properties that they've been letting out to normal lettings. So number one of the most common ones is where someone's doing it themselves. They're not sure what expenses they can include, and so they just claim the £1,000 allowance. And while in some case, it may well be the best option for you, in a lot of people, it generally won't be, as landlords will have expenses of property over £1,000 usually. And so that's why it's good to go to an accountant who specialises in property, such as ourselves, where we know everything that you can claim and make sure that we can claim as much as possible to reduce your tax bill. The second biggest one that we get from clients is not including mortgage interest at all anymore because they heard someone say that it's not an allowable expense anymore. While it is correct that it's not an allowable expense, it still needs to be included. This is because essentially they changed the rules from it being an allowable expense and now it is given as a relief instead. And that relief is given at 20%. So essentially, if you're there and you're renting your property out and you're not including your mortgage interest, just because you heard that it can't be included somewhere, your tax return's wrong and you'll be paying more tax than you need to be. So that's why it's brilliant to get an accountant who will obviously do that for you, and you don't have to worry about any of the rule changes and things like that come into place. And then we've got the third most popular thing, is where someone thinks that they don't need to do a tax return because they haven't made any profit as their mortgage, as the rent doesn't even cover their mortgage. Well, that's what they think, at least. In the eyes of HMRC, if you had a repayment mortgage, for example, and you're repaying that each month, that's not the element that they'll include in their calculations. Because as I said earlier, it's only the mortgage interest and it's now given as a relief rather than an expense. So if your rent doesn't cover your full mortgage payment, that doesn't mean you're not making a profit. So you do need to obviously come forward to HMRC and declare that. So this is the thing that we hear a lot of the time when we're talking about our Let Property campaign clients, the ones who essentially haven't come forward to HMRC purely because of that reason, and they need help getting up to date with their tax affairs. So that's what we do, and that's what we specialise in here at Marslands. So if that's something that you're in a similar situation, you're worried about it, then please feel free to give us contact on 01752 344 582 or email admin@marslands.co.uk. And we're more than happy to get you a quote to help with that, whether that's to help you do your rental accounts going forward, or whether that's to, if you need to disclose some previous years, then of course we can help you with the Let Property campaign. If you just want some more information, especially about the Let Property campaign, please check out our YouTube channel where we have lots and lots of videos talking about the Let Property campaign and other aspects of property tax. Or you can check out our website and there's more information on there. But thank you for watching. Bye.